What up, friend? Welcome back to my YouTube channel. So today I'm gonna share about basic of trading regarding candlestick. Okay, so first of all, before you guys jump into trading world or trading journey, you guys need to understand the candlestick, because most of our analysis will be shown using candlestick. Okay, first of all, I will show you my notes. Okay, in this forex trading, there is two type of candle, which is bearish candlestick and bullish candlestick. So bearish candlestick is the momentum from top to bottom, or normally people will using a red color as a bearish, and for the bullish candlestick, momentum from bottom to top, normally using blue color. Okay, what you guys need to know about this candlestick is OHLC, open, high, low, close. It's meaning that for the bearish, open, the higher price, lower price, and close position at here. Same goes to the bullish, but is contradict with this bearish. So open here, higher here, lower here, close at here. So this is the body structure of candlestick that you guys need to understand. For example, this solid rectangle we call body, and the one we saw like a wick or shadow we call shadow. This one we have upper shadow and lower shadow. Okay, that is the basic of the candlestick. For the bearish candlestick, like I said just now, the momentum is from top to bottom, so it's open price at here and close at here. So why have this shadow or wick? Actually, shadow or wick is the journey of price from highest to lowest that it go, but fell to close at that position. For example, the price open at here and then travel up, but fell to close here and then go down until this lower price. After that, go here and close. Okay, before we continue further, for this candlestick, it depend on the time frame that you guys use or do analysis. For example, if you guys using a 1 hour time frame, so for this one candlestick will be formed around 1 hour, so it will form another candlestick for another 1 hour. That is the candlestick based on the time frame that we observe. If you guys using a 4 hour candlestick, so for this one candlestick to complete, it took 4 hours. Okay, same goes to the bullish. The open price here and then it go up until here, but fell to close here, and then go down until here, and then up again, and then after 1 hour. So this one we using 1 hour time frame. After 1 hour and then it's closed. That's why the price is closed here. Okay, the second thing is you guys need to know characteristic of this candlestick. For example, this one long shadow at the lower part, this one long shadow at the upper part. Every shadow have its own meaning and have its own action after that.
Oh my god!
For example, for this bearish candlestick, it's price from here and then go lower down here and then up after 1 hour, close here. The meaning of the shadow is actually have a buying pressure. Any candlestick on the highest time frame, if have the longer wick or shadow at the bottom part, it tells that the market will go up. On the other hand, for this shadow that longer on the top part, it tells that the selling pressure is dominant after this type of candle. For example, H4 or daily, after this candle the price will go down. So that is the the basic characteristic that you guys need to know about the wick of the candle. Okay, I recall again. For the candlestick that have a longer shadow at the bottom part, the pressure for buyer is high. For the shadow that on the upper part is longer, meaning that the selling pressure is higher. After this candle, high probability the price will go down.
What?
Same goes to this bullish candlestick. Okay, if you guys already understand about this, we can go direct to the real chart. So I show you example. For example, I take a good example for you guys. Here is a resistance. If you watch carefully, before the price go down, there's a longer wick on the candlestick compared to the bottom part. After the longer wick, and it's go down. If you saw from here, longer wick, longer wick, longer wick, or longer shadow, after this thing happen, the price will go down. Same goes to the lower shadow. If the lower shadow is longer than the upper, you see here, the shadow here is longer than the upper shadow, and here also, and here also. After that, the price go up. Same goes here. It tried to consolidate little bit. After that, have a longer wick at the bottom part, and the price go up. So the higher the time frame, the higher the probability to follow the candlestick. Okay, after you guys understand this one, so we jump to the candlestick pattern. Okay, here we have candlestick pattern that you guys need to understand. Don't memorize all of these candlestick pattern, because if you guys memorize without understand the meaning, also useless. So you guys need to understand it. For example, we have 4 common candlestick pattern that applicable and always useful in our trading. For example, bearish, bullish engulfing, bearish engulfing, morning star, and evening star. So these 4 candle is the most that affect our price pattern.
Okay.
You guys need to focus on these 4. For beginner, just focus on these 4 candlestick pattern: bullish and bearish engulfing, evening star, and morning star. So this is the candlestick pattern price action that you guys can use in your trading. Always trade using a price action. So this is one of the price action.
I am the one, the way your son don't need a...
Okay, we go to our chart. Okay, I show you here. For example, if we look carefully, we can determine this candlestick pattern. This candlestick pattern is a 3 white soldier. So there's a selling pressure. After that, have an engulfing, and followed by 3 bullish candlestick, and then the price go up. So you guys need to remember, the higher the time frame, the more valid the indicator. So here is at the H1 time frame, but if you go to H4, actually there is a pattern of morning star. So this is morning star pattern. So after this candlestick pattern, the price go up around 94 pip. So need to bear in mind, the higher the time frame, the more valid the price action. Okay, we find some more of the candlestick. For example, this one, this is we call bearish engulfing. This candlestick, the red one, the bear candlestick, engulf this bull candlestick, and then after that the price go down around 900 pip or 90 pip, sorry. And then we find some more. Here we have a 3 white soldier. This pattern, always make use of familiar with this pattern because it will impact your decision making in trading. But don't rely on the price action without determine the support resistance. Okay, I want to find another candlestick pattern. For example, this one we call bearish engulfing. After that, the price go up and go down right at 100, and then further one until 110 pip. Always respect the high time frame. Okay, I think that's all for the basic of candlestick. Thank you for watching.